Government. It's a word that can spark both excitement and dread. But one thing's for sure, it plays a huge role in our lives, especially when it comes to our wallets. That's right. Those policies and decisions made in those fancy buildings, yeah, they directly impact how much money we keep and how businesses operate. Buckle up, because we're diving deep into the world of government policies and their impact on your hard-earned cash. Think of it like this. The government is like a referee in a boxing match. It sets the rules, enforces them, and sometimes even steps in to give a fighter a little help. But instead of punches, we're talking taxes, tariffs, and subsidies. These are just some of the tools in the government's arsenal that can make or break your budget. Now, you might be thinking, this sounds complicated, and you're not wrong. But don't worry, we're here to break it down in a way that even your uncle, who still uses a flip phone, can understand. So whether you're a seasoned investor, a small business owner just starting out, or someone who just wants to understand where their tax dollars are going, this is for you. Let's get started. Taxes. We all know them, we all sometimes hate them, but we all got to pay them. Taxes are how the government keeps the lights on, the roads paved, and funds those sweet, sweet public services we all rely on. Think of taxes as the government's membership fee. You pay your dues, and in return you get access to public goods and services like schools, parks, and yes, even national defense. Sounds fair, right? Well, it can get a little more complicated than that. You see, there are different types of taxes, and each one impacts your wallet in a different way. There's income tax, which takes a chunk out of your paycheck. There's property tax, which you pay on your home or land. And, of course, who could forget sales tax, that sneaky little fee tacked onto almost everything you buy. The amount you pay in taxes depends on a whole bunch of factors like your income, where you live, and even what you buy. And believe me, the government has a whole army of accountants whose sole purpose is to figure out how much you owe. Fun times. Let's start with the big kahuna income tax. This is the tax that most people are familiar with, as it's automatically deducted from your paycheck. That's right, the government takes its cut before you even see your hard-earned cash. Sneaky, right? But hey, it's not all bad. The income tax is a progressive tax system, which basically means that the more you earn, the more you contribute. So, those high rollers raking in millions each year, yeah, they're paying a much larger percentage of their income in taxes than someone working a minimum wage job. Now, the government uses this income tax revenue for a whole bunch of stuff like funding social programs, investing in infrastructure, and yes, even paying for those fancy government buildings we talked about earlier. But here's the kicker. The income tax rates and brackets can change depending on who's in charge. That's right, politicians love to tinker with the tax code, promising to lower taxes or give certain groups breaks. Whether they actually follow through on those promises, well, that's a whole other story. Now let's talk about sales tax, the tax that's often hiding in plain sight. You know how when you go to buy something and the price tag says one thing, but then you get to the register and it's suddenly higher? Yeah, that's sales tax, my friend. It's like a magic trick, but instead of a rabbit, poof, more money disappears from your wallet. Sales tax is a consumption tax, which means you pay it when you buy goods and services. The idea is that the more you spend, the more sales tax you pay. But unlike income tax, which is progressive, sales tax is considered regressive. What does regressive mean, you ask? It means that lower income earners end up paying a larger percentage of their income in sales tax compared to higher income earners. Think about it. If you're struggling to make ends meet, a larger chunk of your income goes towards essential goods and services which are subject to sales tax. Now, sales tax rates vary depending on where you live. Some states have high sales taxes while others have low or even no sales tax at all. And to make things even more confusing, some cities and counties tack on their own local sales taxes on top of the state sales tax. It's enough to make your head spin. Section 5. Tariffs, protecting domestic businesses, but at what cost? We've talked about taxes that the government collects from us, but what about taxes on goods coming from other countries? Enter tariffs. The government's way of saying, hey, if you want to sell your stuff here, you got to pay up. Tariffs are basically taxes on imported goods, making them more expensive for consumers. The idea is to protect domestic businesses from foreign competition and encourage people to buy American-made products. Think of it like this. If a foreign car company has to pay a tariff to sell its cars in the US, those cars become more expensive, making American-made cars more appealing to buyers. Sounds good in theory, right? Well, like most things in economics, it's not that simple. While tariffs can protect domestic industries, they can also lead to higher prices for consumers and retaliatory tariffs from other countries. It's a delicate balancing act, and if not done carefully, it can lead to a trade war. And nobody wins in a trade war. Think of it like this. If the US slaps a tariff on steel imports from China, China might retaliate by putting a tariff on American soybeans. Now, American soybean farmers are hurting because they've lost a major market for their product. See how things can get messy? Section 6. Subsidies. A helping hand or a market distorter. Now, let's move on to subsidies, which are essentially the opposite of tariffs. While tariffs make foreign goods more expensive, subsidies make domestic goods cheaper, giving them a leg up in the market. Subsidies are financial assistance from the government to individuals or businesses, typically in the form of direct payments, tax breaks, or low-interest loans. They're designed to support industries that are deemed important for economic growth, national security, or other policy objectives. For example, the government might provide subsidies to farmers to encourage agricultural production or to renewable energy companies to promote clean energy. Subsidies can help make these industries more competitive, stimulate innovation, and create jobs. However, subsidies can also distort the market and create unfair advantages. If one industry is heavily subsidized while another is not, it can create an uneven playing field. Additionally, subsidies can lead to overproduction, inefficiency, and a reliance on government handouts. Section 7, real-life examples, the government in action. Okay, so we've talked about taxes, tariffs, and subsidies in theory, but let's bring it down to earth with some real-life examples. Remember when the price of those avocados skyrocketed a few years back? Yeah, that was partly due to tariffs imposed on Mexican avocado imports. The tariffs were meant to protect American avocado farmers, but they also led to higher prices for consumers. So your avocado toast just got a whole lot more expensive. Or how about the time the government bailed out the auto industry during the 2008 financial crisis? That was a massive subsidy program designed to prevent the collapse of major American car manufacturers. While it saved jobs and prevented a deeper recession, it also raised concerns about moral hazard and the government picking winners and losers in the market. These are just a few examples of how government policies can have a real impact on your wallet and the economy as a whole. Section 8, the bottom line, your money, their policies. So what's the takeaway from all of this? Well, the government plays a huge role in our financial lives, whether we realize it or not. From the taxes we pay to the tariffs and subsidies that influence prices, government policies impact everything from our paychecks to the cost of our groceries. It's important to stay informed about these policies and how they affect you. Pay attention to the news, read up on different perspectives, and don't be afraid to contact your elected officials to voice your concerns or support. Remember, knowledge is power, and when it comes to your money, you want to be as empowered as possible. Section 9, conclusion, navigating the financial landscape. As we've seen, the relationship between government policies and your wallet is complex and constantly evolving. There's no one-size-fits-all answer, and what works in one situation might not work in another, but by understanding the basics of taxes, tariffs, subsidies, and other government interventions in the market, we can become more informed citizens, savvy consumers, and responsible investors. So, stay curious, stay engaged, and keep asking questions. After all, it's your money on the line.